Let's get to the SPAC, Bill. You know, it's only been 6 weeks. You have a couple of years, really, but we know that there have definitely been conversations, due diligence being done, and we reported yesterday that Airbnb was said to have rebuffed an approach from you. Explain what that all means, how it all went down.
Sure, I wouldn't use the word rebuff, and we've had a very nice dialogue with Airbnb. We got to know the management team or a number of the senior members of the team. It's a business that we've admired over time. They've been on a path to go public. We talked with them about our structure, and I think they have not, as your article pointed out, they haven't decided against going the SPAC route. But at this point, I think their first choice is to do an IPO. Putting aside Airbnb, just speaking generally, what we offer to a company is the ability to inject, $5 billion of cash, take them public. If we started today, if we opened a due diligence, we got access to a data room on a company and had opportunity to spend time with management by Zoom, when I would say in 3 to 4 weeks, depending on the nature of the business, we could get a sufficient understanding of the business to be comfortable, and we could also negotiate a deal, and we could give them certainty on raising capital, and they could become a public company, 45 to 60 days after that initial 30-day period of time. But we give them certainty, if you will, in the first 30 days. A company like Airbnb is filed confidentially. At some point, they're going to file their prospectus. Sometime in December, maybe after the election, possibly before the new administration comes in, it's really that last day of the roadshow that they'll know what price they get and whether that's a certain transaction and how much capital they raise. It's a different approach. You're sort of, you're taking behind door number 3 as opposed to the bird in hand, so to speak. And I guess we did not get to a stage where we had access to inside information. We had the ability to do real due diligence on the business, or did we have any opportunity to discuss valuation with Airbnb? We really kind of a get to know you. I think the reports are true that we've had some discussions, but they were very preliminary, and we did not discuss valuation, and we didn't get to do a deep enough dive, frankly, to determine whether this is a business we'd want to own and at what price we'd want to own it at. So we like the company, at least from the outside, in terms of the nature of the business. We don't know enough about the economics of the business or the way it's run to have a view as to whether it's a fit for what we're trying to do.
Just from their point of view, Bill, and obviously the certainty of the price that they would get is a big plus, right? It's a big thumbs up for that. But otherwise, and given that they would have to give away something in order to go the SPAC route, right, they would definitely very much have to let you have a big say in how they run the business. What would be in it for them to go the SPAC route, given that, their board is full of people like, Ken Chenault and Greylocks, Reid Hoffman and so on? There's plenty of advice there.
Sure. So actually, we're not insisting on a particular role for Pershing Square or any member of our team or any of the directors on the Pershing Square Tontine board. Obviously, the governance of whatever company we merge with is an important topic, and we're going to want to make sure it's a board that has appropriate independent representation. But we're not requiring that Pershing Square, necessarily has a seat on the board. It really depends on the situation. It depends on the existing board. The last SPAC transaction we did, many years ago, 8 years ago, was Burger King, and a couple of directors from our SPAC at that time joined the board, but I did not personally. Excuse me. And it's been a very successful experience. So I think maybe there's some misconceptions about SPACs sort of generally, but in our case, you don't give up anything by doing a deal with us. And you get to figure out everything up front before you sign the papers and before you even have to tell anyone you've begun your process. So I think what's attractive about what we are offering is the ability to give certainty in a very short period of time. A $5 billion IPO is a very large IPO. Other than Alibaba, Facebook, and Uber, there has not been a $5 billion plus IPO in the U.S. for the last decade. And so if you're a large company that wants to raise a large amount of capital, today is sort of a perfect reason why you don't want to just, I think while markets are $1 billion, maybe people get excited they'll get an overvaluation, if you will, in an IPO transaction. Maybe that's why that route makes sense. But you don't know until the last day of the IPO process whether your transaction gets done or not. And that's why we've had enormously, let's put it this way, we weren't rebuffed by Airbnb, but I would say we've certainly been welcomed by a meaningful number of kind of private equity controlled companies. We're in a number of discussions, also preliminary, as well as I would say family or individually controlled companies. We were doing work on various businesses, getting to know management teams, and I'm quite confident we're going to find a transaction that makes sense for us and a transaction that makes sense for the other side. But in a volatile market, the reason why we launched Pershing Square Tontine in this market was our expectation was volatility to come, and certainty and a $5 billion injection of cash is something I wouldn't walk away so quickly from. If our positions were reversed and I was the CEO of a private company that needed to raise a lot of cash to go public and had to do it within a reasonable time frame, I would take a very hard look at what we offer.
Well, then, Bill, let me ask you why you might be so interested if there are certain problems in a volatile environment. And we all know that criticism is leveled against Airbnb, right? They had to raise $2 billion at the beginning of the pandemic. Brian Chesky was even sort of called upon to step down at an early point in the pandemic. Why would you be so interested in this business if it is such a volatile business? And yes, you know a lot about tourism and about travel and hotels and stuff, but what would be your confidence in this business?
Look, again, we have not done the work on Airbnb. We've not had access to inside information. We're looking for, our favorite businesses in the world are sort of asset-light, annuity-like businesses that can grow at a high rate over a very long period of time with a lot of durability. To the extent that Airbnb meets those criteria and it's managed well, it has a control over its cost structure, there's a path to meaningful profitability and cash flow generation, then it's a business that meets our criteria. If not, it's not a business that meets our criteria. And the companies that we're looking for, what I would describe as very, very durable, growth companies, will accept a degree of volatility. We were buying Hilton stock, in the depths of the market in March, even though the hotel industry is really on its knees because we've got a long-term view on the industry, and we haven't sold a share of Hilton that we've acquired, and we now own just under 5% of the company. So we like businesses where, if you will, you own a royalty on future growth and travel. That's appealing to us. But there are many other kinds of businesses we're looking at in the, call it fintech space, as well as some consumer businesses, some sort of B2B, companies, kind of a full spectrum of different businesses, and we're trying to find a fit between what we offer and what will be of value to a counterparty. But I do think market volatility is our friend. Interestingly, Pershing Square Tontine, I noticed today, was either flat or slightly up for the day in a down 5% market. And I think what the market's saying is this entity becomes more valuable with greater uncertainty. It's now trading at about a 10% premium to the cash that we have in the till, and it's worth a premium to the cash because the worse the world gets, in a way, the better the deal will make.